everyone. I'm re-recording the first half of the webinar because for some reason I thought I pressed record when I was doing the webinar, but obviously either I did and it went off for some reason or I just forgot to press record. So I'm actually re-recording the first part of the webinar. Okay, so what is the webinar about? This webinar is about how to calculate your estimated quarterly taxes on your own. Okay, so before I get started, let me go ahead and introduce myself. And by the way, one of the reasons why I decided to do this class was because I have lots of people call me and contact me asking me how they can calculate their quarterly estimated taxes or wanting me to do it. And usually if your income is, if you have pretty simple transactions and you don't have a whole bunch of complicated stuff going on, you can actually calculate your own quarterly estimated taxes, or there are other ways in which you can determine how much you need to pay every quarter. So I decided to do this webinar just to let people, give people options if they decide that they don't necessarily want to pay someone to help them calculate their quarterly estimated taxes. There are other ways in which they can actually calculate these taxes and get them off to the government, both the state and to the IRS. So let me start out by introducing myself. My name is Desiree Anderson. I'm a certified public accountant located in the state of Georgia. I am also an enrolled agent. And for those of you that don't know what an enrolled agent is, we are licensed by the IRS to represent taxpayers in front of the IRS. So for example, if you are dealing with an IRS audit, if you owe the IRS money and you're trying to figure out a way or trying to set up some sort of payment plan with the IRS, or if you're trying to determine whether or not you qualify for an offer in compromise, you would contact a person like myself. Now, there are normally 3 different entities that are legally allowed to represent taxpayers. They are enrolled agents, certified public accountants, and attorneys. So if you're looking for somebody who is actually allowed to represent you, the taxpayer, before the IRS, those are the 3 people that you want to seek out. I am also a former salon owner and licensed stylist for over 19 years. So I have been a salon owner, I've been a salon suite owner, I have been a booth renter, I was an educator for Farouk Systems, I worked for Regis, I worked for Fantastic Sam's, I was a platform artist. So I have pretty much done most everything when it comes to the beauty industry. So I am very, very familiar with our industry. And that is one of the reasons why I decided to serve this particular niche, because this is where I came from. This is my experience. So that is the reason why I decided to work with other stylists. Now, I'm an accountant and a financial guide to the hair industry. I'm also a public speaker and a financial educator. And for those of you in Georgia, I actually offer CE classes, or I provide CE credits for a license renewal. So if you're in Georgia, you can contact me if you're looking to get CE hours to renew your license. So what I do mainly, the main thing that I do, okay, so I try to bridge the gap between what we should have learned in cosmetology school about business, but did not, and what we need to know in order for us to run a financially successful beauty business. Because I don't know about you, but when I was in cosmetology school, when it came to the business portion, all I actually learned was business as it relates to how to run a business within the salon framework. So what did you need to do when it came to shop duties, just to make sure you're doing things properly in the salon? They never really taught us the things that we need or gave us the tools that we needed to go out into this world and actually run a real life business. So I try to bridge the gap between what we didn't learn and what we need to know to run a business. Okay, so let's go ahead and get started. So what's the agenda for this webinar? The agenda is as follows. We'll be talking about who is required to pay estimated taxes. We'll be talking about calculating your estimated taxes, quarterly estimated taxes due dates, when are the estimated taxes due. And the reason why this is very important is because it says quarterly estimated taxes, and technically speaking, a quarter is January, February, March, April, May, June, July, August, September, October, November, December. So even though it says quarterly estimated taxes, the due dates are not really set up in quarters. So, and it's important that you know that. That way you estimate your taxes within the quarter as it relates to the IRS and get them off on time, okay? We'll talk about the different ways to pay your estimated taxes. We'll talk about estimated tax payments penalties. And then also I'll be demonstrating an Excel spreadsheet that I created to show you how you can use that spreadsheet to actually calculate your quarterly estimated taxes. Now the spreadsheet is actually twofold. You can use it strictly as a way to track your income and your expenses, and you can also use it to estimate your quarterly taxes. So either way, you can use it for either task. So if, for example, you have an accounting system that is outside of the spreadsheet, you don't necessarily have to use the spreadsheet to track your income and your expenses in order for you to calculate your quarterly estimated taxes. You can just go ahead and grab the numbers from your outside accounting system and then use the spreadsheet to calculate your taxes. And that's something that's something that I'm going to show you during the demonstration. Okay, so who is required to pay estimated taxes? If you are a sole proprietor, an LLC, or a C corporation. So a sole proprietor, that would include possibly independent contractors and anyone who is in the gig economy. Now, when I say gig economy, I'm talking about something like, let's say, for example, you work for an app company as a hairstylist. You may be a mobile stylist and you work for an app company. Now, you have several of those. You have BGLAMs, you have the Glam app, you have Priv. These are app companies, and I call them Uber for hair. And I say this because sometimes when people work with these sorts of companies, they're under the impression that they are not a business and therefore they don't have to follow business rules and regulations. And I always say, if the IRS and the state treats you like a business, then you are a business, meaning you should treat yourself like a business. So that means that if you are working in the gig economy, if you are a booth renter, you are a business owner, and therefore you are required to pay estimated taxes. If you are an LLC owner, so LLC meaning that you have registered your business with the state that you're in, and you either are a single member LLC, which means you are the sole owner of that business, or if you are a multi-member LLC, meaning that you are a partnership, you own the business with somebody else, you are required to pay quarterly estimated taxes. And of course, if you are a C corporation, you are also required to pay quarterly estimated taxes. Now, most of the businesses that I work with, or at least most of the salons that I work with, usually aren't C corporations. Normally, C corporations are usually larger salons, say like I would say Regis or like Fantastic Sam's. They tend to sometimes create corporations, but generally speaking, the salons that I work with normally are LLCs and S corporations, and of course some of them are sole proprietors and of course partnerships as well. So once again, anyone in business that files a tax return, who works for themselves, or even if they work for a company but they also have side income, are all required to file and pay estimated taxes. So if you are self-employed, or if your self-employment and your income tax combined is $1,000 or more, or $500 if you're a corporation, you are required to pay quarterly estimated taxes. And the reason why I say self-employment and income tax is because they are two different types of tax. As business owners, we pay two types of tax. We pay self-employment tax and we pay income tax. Self-employment tax is 15.3% of our income, our net income, whereas income tax is just based upon what our tax rate is. So we cannot get away from paying self-employment tax. Usually, self-employment tax is normally more than our income tax. Now, what exactly is self-employment tax? Self-employment tax consists of Medicaid and Social Security. And as you know, we all have to pay into Medicaid and Social Security, because the idea is when we retire, we are going to receive Medicaid and we're going to receive Social Security. Therefore, it is a must that everybody has to pay into it. So if you work for a regular company, let's say you're a W-2 employee, when usually your employer withholds Social Security and Medicaid, okay? So that's what we as sole proprietors, we as business owners, that's what we are paying. The only difference is, as a W-2 employee, you are only paying half of what we as business owners pay. As business owners, we have to pay 15.3% of what our net income is. If you are a W-2 employee, you only pay half of that, and then your employer pays the rest on your behalf, okay? So who is not required to pay estimated taxes? If you are a W-2 employee, you are not required to pay estimated taxes because your employer already withholds Social Security and Medicaid from your paycheck. Therefore, you're not required to pay estimated taxes. In addition, they withhold income tax as well from your paycheck. Now, if you are a W-2 employee, but you also have a side business, you're doing something on the side, let's say you do hair on the side or you do something else on the side, then you are required to pay quarterly estimated taxes, at least to calculate it, to see if you're going to have to pay, because that income that you're receiving, the business income, nobody is withholding estimated taxes on that income. Therefore, you have to actually calculate and make the payments on your own. Then also, if you are an employee of your own S corporation with zero in distributions for that year. So let's say you own an S corporation, and as an S corporation owner, you are required by law to pay yourself as an employee of your business, which means you are on payroll. Because you are on payroll, you are automatically withholding Social Security, withholding Medicaid, and withholding income tax, both states and federal, from your paycheck. So this means that you don't have to pay estimated taxes. Now, if you anticipate getting some type of distribution from your S corporation, then you may be required to pay estimated taxes because you will likely owe income tax on that distribution, possibly. Now, with S corporations, it's a little bit more complicated, because if you have something called bases in your S corp, then your distribution may not be taxable. So with S corporations, it's advisable, before you start doing any sort of calculation, that you speak to an accountant, so they can help you determine the best way to move forward when it comes to calculating your estimated taxes. Other individuals that are not required to pay estimated taxes are if people that made less than $1,000 in taxes in the previous year. So if in, say, 2018, we're currently in 19, if in 2018 you happen to have paid less than $1,000 in taxes, that means that you are not required in 2019 to pay estimated taxes. Now, that being said, even though you're not required, I always say it's best practice to go ahead and pay it anyway, especially if you know that you're going to have a much better year in 2019, or let's say in the subsequent year. Let's say the prior year, you just started your business and you only brought in, let's just say $30,000. And by the time you finished, all expenses and everything else, you owed less than $1,000 in taxes. However, in the subsequent year, you are on track to make maybe twice that or three times that. Well, you already know you're going to owe quite a bit in taxes. So even though you're not required to make estimated payments because you made less than $1,000 the prior year, it's advisable to go ahead and estimate your payments and pay them anyway. That way you don't find yourself at tax time having to come up with tens of thousands of dollars to pay your taxes. Also, if you did not owe any tax in the previous year and you didn't have to file a tax return, you are not required to pay estimated taxes in the subsequent year. So how do you calculate your quarterly estimated tax payments? Well, there are a couple of ways you can do that. The easiest way is to base it on prior year. So you can base your estimate on your prior year's taxes, even if you are not in business at the time. So what does this mean? This means that all you have to do, let's say that you don't feel like going through the whole calculation, you don't feel like calculating your quarterly estimated taxes, you can just go ahead and look at your prior year tax return, and you can take that, whatever you owed in 2018, you can take the total, divide it by 4, and then send a check to the IRS every quarter. So whatever your total tax came to last year, just go ahead and divide it by 4 and send it off in 4 equal installments. That is one way to do it. That's the easiest way. So if you find yourself struggling and not really knowing what you need to do, or let's say you're running late and it's time for you to actually make the payment and you're just confused, you have no idea what you need to do, then the best thing is just to go back to the prior year and calculate your taxes based on your prior year income, or rather your prior year tax liability. Now, so how do you determine how much you should pay if you decide that you want to compare this year to last year? Okay, so if your prior year's income, right, is less than 100, or rather was less than 150,000, or $75,000 if you're married filing separately, then all you're required to pay is 90% of your current year taxes, or 100% of last year's taxes, whichever is less. Now, the reason why this is, I would say important, is for a couple of reasons. Because you think about it, if you're paying 90% of your current year taxes, that means that you have taken the time to actually calculate your quarterly estimated taxes, and then you decided, you know what, I think I'd rather go ahead and just pay, send in a 1/4 payment from prior year. And this could be for a couple of reasons. Maybe in the current year that you're in, you are making way more money than you anticipated. And for some reason, you don't really have enough to pay, or rather, you don't really have enough money left over after your expenses to pay your quarterly estimated payments. So then you decide you want to send something in, and you don't want to be fined, or you don't want to be fined, assessed a penalty for not making those payments. Well, what you can do is you can go ahead and look at your last year's taxes, okay? And you can look at your liability, and after you divide it in 4 equal payments, you can look and see how much it is. Let's assume that after dividing it into 4 equal payments, you're only required to send in, say, $1,000, right? However, when you look at your current year's estimate and what you're required to pay for this particular quarter, you might have had a wonderful quarter, and you're required to pay $3,000. Well, if you didn't plan properly, and you didn't pull money out on on a monthly basis, you may not have the entire $3,000 for that quarter to make the payment. So you have a choice of either making the $3,000 payment, okay, or making the $1,000 payment that signifies your last year's tax liability. So that's the reason why, even though you actually go ahead and take the painstaking steps of calculating your quarterly estimated payments for that particular year, you may still decide to go back and pay your estimated taxes based upon last year's income. Now, one other thing is, if you made in the prior year more than $150,000, or more than $75,000 if you're married filing separately, then instead of having to pay 100% of last year's taxes, you are now required to pay 90% of your current year taxes, or 110% of your last year's taxes, whichever is less. So once you calculate your last year's tax liability, and then you determine 100, what 100% of that is. You take that 100%, whatever that total is, you divide it by 4, and you send the IRS a payment every quarter. Or you can pay 90% once again of the current year's taxes. So those are options that you have. Okay, so how to calculate your estimated taxes once again. You have 2 options. You can hire an accountant to help you do it, or you can do it yourself. Now, if you hire an accountant, if your income fluctuates quite a bit from month to month, then usually the best solution is to probably hire an accountant, because it's going to change every quarter. And what we do as accountants is we help you project what your income is going to be for that year. So we will take your quarterly estimated tax payments, okay, for that particular quarter. Let's just say we're dealing with quarter 1, because quarter 1 is about to end. Let's say we're dealing with quarter 1. We will take your quarter 1 totals, and we will project based on that how much you are anticipated to make for that particular year. And then we will use that information to then calculate your estimated taxes. Now, if you decide to do it yourself, it's the same scenario. If your income fluctuates from month to month, then you want to use an estimated tax calculator. And that is what I was telling you about as it relates to the spreadsheet that I created. The spreadsheet that I created actually will help you estimate your quarterly taxes. It's a calculator, so all of the formulas have been set up to actually help you calculate your quarterly estimated payments. And I'll show you that during the demonstration. So once again, you can hire an accountant to help you out, or you can do it yourself. And doing it on a quarterly basis is very, very necessary if your income fluctuates a lot. Now, if you have a book of business where your income is pretty consistent from quarter to quarter, okay, then you may not necessarily have to calculate your quarterly estimated taxes every quarter. You could just figure out, okay, well, based on the fact that my income is pretty consistent from quarter to quarter, I'm just going to mail in the exact same amount every single quarter. Now, keep in mind, we are talking about estimates. So it's not going to be perfect. It's estimates, which means that at the end of the year, or at the end of the year, or in April, when you finally file your taxes, you may have paid a little too much, or you may have paid not quite enough. If you've paid a little bit too much, that's okay, you'll get a refund. And if you haven't paid quite enough, that's okay too, because you just have to add to what you already paid. The worst thing you can do is pay nothing. Because if you pay nothing and you wind up owing, say, $15,000, which is very possible, especially when you start looking at your self-employment tax, then it's very, very difficult to come up with $15,000 at one time. It will be a lot easier to take that $15,000, divide it by 4, and make those payments every quarter. And by the way, I'm going to be putting on a workshop for people that are using QuickBooks Self-Employed. So if you are either interested in using QuickBooks Self-Employed, or you currently use QuickBooks Self-Employed, then I'll be doing a workshop that's going to be about maybe 5 or 6 days. I haven't really decided how many days. We are going to start from the very, very beginning, and I'm going to show you how to set up the system from beginning to end and how to properly set things up. That way you can start to track your income and your expenses. You can also start to track your mileage if you are a mobile stylist or if you travel a lot. And also you are going to be able to, the good thing about QuickBooks Self-Employed is it automatically calculates your estimated payments. So under those circumstances, you won't necessarily need to use this spreadsheet for that. You can just use QuickBooks Self-Employed. And also, if you do have the W-2 income, or if your spouse has W-2 income, QuickBooks Self-Employed also allows you to include that as part of the calculation. So we're going to go ahead and we are going to work together. It's going to be a hands-on workshop online, of course, a virtual hands-on workshop, and we are going to work together to set up your system from beginning to end. I will answer all of your questions, and we will work together step by step by step. So it's going to take, ordinarily, I probably need more than 5 days, but I'm going to try to see if I can fit everything into a 5-day workshop. And if it needs to be more, then I will stretch it out. Okay. So hopefully you guys will be interested in that if you are interested in using QuickBooks Self-Employed as a bookkeeping tracking system. Now that you know the different ways that you can calculate your quarterly estimated taxes, now let's talk about when these taxes are due. So quarterly estimated taxes are due 4 times a year. Now I know that it says quarterly estimated taxes. However, you're going to notice that you're not really paying them per quarter, because normally a quarter is 3 months. There's 3 months in each quarter. But when you're paying your quarterly estimated taxes, the only payment that encompasses 3 months is the taxes that are due in April and September. Okay, so your first payment is due April 15th. That payment consists of January, February, and March. So all the income that you made in those 3 months is due April 15th. June 15th, your quarterly tax, your second quarterly tax payments are due. That particular payment only encompasses April and May. So that's only 2 months that it encompasses. Quarter 3 is due September 15th. September 15th encompasses June, July, and August. So whatever you make June, July, and August, it is due September 15th. And then finally, quarter 4 is actually due July 15th of the following year, which means that September, October, November, and December is due January 15th. So as you can see, there's no rhyme or reason, because you have your first quarter, which encompasses 3 months, which is normally what a quarter consists of. Then you have your third quarter that also encompasses 3 months, which is what a quarter consists of. But then second quarter is only 2 months, and then fourth quarter encompasses 4 months. So keep that in mind when you are paying your quarterly estimated taxes. Okay, let's see if you use QuickBooks already. Okay, so let me break down the difference between the types of QuickBooks that we have. We have QuickBooks Self-Employed and we have QuickBooks Online. Then there's QuickBooks Desktop. So depending upon what your needs are, the type of reports that you actually need to track, the type of reports that you want to see in your business, the types of items that you want to track, how many streams of different income you have. When I say streams, I'm talking about, let's say you are you work behind a chair. You also have YouTube videos that you're monetizing. You also are an educator. Then that is multiple streams of income. When you have multiple streams of income, I would suggest that you go with QuickBooks Online and not QuickBooks Self-Employed, because you want to make sure you're tracking that income. You want to make sure you're tracking the income so you can see where your money is coming from. Because one thing you don't want to do is have multiple streams of income and then not knowing whether or not one of those streams is even making any money. Because if you just combine them without really looking to see what you're making where and where your expenses are going, you might have one stream that has losses every year and you didn't even know. You didn't know because you combined your income. And when you combine it, then you see an actual positive income. But what has happened is you've had the money that you made has absorbed what you lost. And you don't even know that because you weren't tracking the different streams. Okay. And also with QuickBooks Self-Employed, if you have a business and you are the type of person that wants to track your not, and let's say you don't have multiple streams of income. Let's say you have only one stream, which is you behind the chair doing hair, but you would like to track every service that you provide, because you want to see how much each service is bringing in, or you want to also track your inventory to see what you're selling. So then you would go with QuickBooks Online, because the more detail that you want, QuickBooks Online is a better solution versus QuickBooks Self-Employed. QuickBooks Self-Employed is a different animal than QuickBooks Online. So, and what I'm going to do is I'm going to write a brief article explaining the differences that way, and I'm going to send it out so you guys can look at it, read it, and determine what's best for you, because I don't really want you coming to this workshop if it's going to waste your time and if QuickBooks Self-Employed isn't for you. So you need to know what solution is going to work for your business, depending upon how you run your business and the types of items you want to track and just what you want to see, what kind of reports that you want to see at the end of the day. Okay, so I'm going to answer a couple of questions. Let's see. Calculating taxes owed to make the quarter payments. How would I calculate this when I am a new business owner, opened November of 2018, and my husband works a W-2 job, and we have five dependents. Wow. Congratulations to you, 5 dependents. And we have previously gotten a tax refund. Well, as I said earlier, if you get a tax refund and you know that you're going to get a tax refund, then you may not necessarily need to make estimated quarterly tax payments. You may want to consult with someone to find out whether or not you are required to make quarterly tax payments. But if you know you're getting a refund, you don't really have to. Now, let's assume that you don't get a refund and you're self-employed, your husband is a W-2 worker. But under those circumstances, you will have to calculate your quarterly estimated taxes, but you also have to include your husband's W-2 income. Okay, so if you file jointly, now if you're married and you file jointly and one spouse has W-2 income and the other spouse has business income, then you guys will have to calculate your taxes together. Okay, now the spreadsheet that I created, and that's one of the things that I mentioned on the explanation on how the spreadsheet works, is that if you have W-2 income, the spreadsheet that I created does not calculate W-2 income. So therefore, you have to have only business income. It only calculates individuals who have business income. It doesn't account for W-2 income, but QuickBooks Self-Employed does. Now, QuickBooks Online does not calculate estimated taxes. QuickBooks Self-Employed does calculate estimated taxes. If you get QuickBooks Self-Employed, you can set it up and include your husband's W-2 income. And it's going to ask you a ton of questions, and you just have to answer the questions correctly, set it up properly, and then when it's doing its calculations behind the scenes, it's taking into consideration your husband's or your spouse's W-2 income. Okay, so I only see the tax due chart. Okay. Yeah, that's what we're on right now. I'm about to move on. Will you offer a workshop for QuickBooks Online eventually? Yes, I will, Felicia. All right, so let's move on. So how to set aside monthly payments. Now, I know this is something that is pretty simple. It's pretty straightforward. It doesn't take a genius to figure it out. So from me bringing it up, I'm not trying to assume that you guys don't know, don't have any idea about this, but I'm just bringing it up because sometimes the simplest things are the things that we don't do. So in order for you, let's assume that you're actually calculating your quarterly estimated taxes and you're doing what you're supposed to do, right? I always suggest that you have a separate bank account where you actually deposit the money. You want to transfer your money from your regular business account to your tax business account. And the reason is because if you don't separate the funds or you don't separate the money, then you are going to have a tendency of possibly spending the money because you see it in your account. You're like, oh, wow, it's right there. I see it. And then you don't really think about the fact that, oh, well, this money is not money to be spent. It is money that is for my quarterly estimated taxes. And then sometimes you just say, well, let me borrow money from myself and I'll pay myself back later. When it's right there in front of you and you have access to it, it's so much easier to spend. So my suggestion is to go ahead and get a separate account and then just transfer the money out from one account to the next every month. Now, what I would do is, because you're calculating your quarterly estimated payments, So you're not really going to know what your payments are month to month. Once you're done with the first 3 months, then you will have an idea of, okay, well, I pay, this is what was due first quarter. You can just take the first quarter, numbers and just start to put away monthly payments based on your first quarter. So you take your first quarter payments, divide it by 3, and then when April rolls around and June rolls around, you'll just put the first quarter payment, or rather your okay, let me back it up. Okay, so your first quarter consists of January, February, and March. Okay, so once you've calculated that, you know how much you owed for the first quarter. Second quarter starts in in April. Well, in order for you to know what your second quarter is, you would have to have calculated April and May, but you don't know but you have no idea what your second quarter payments are going to be because May has not rolled around yet. So at the end of April, you will just take whatever you made in quarter 1, divide it by 3, and then put aside that amount for April. And then in May, you can do the same thing. And then when you finally calculate your quarterly estimated taxes in June, you will either have all you need already saved up in the bank, or you would have to add just a little bit more to make up for what you didn't add in the bank because of the fluctuation of your income. I hope that makes sense. I'm trying to make it make sense. So that is something that you should do. That way, it's because it's so much easier to come up with $500 every month than it is to come up with $1,500 at the end of the quarter. Just like it's easier to come up with $1,500 at the end of the quarter than it is to come up with $6,000 at the end of the year. So that is what I normally do. I normally just make sure that every month I put some money aside for my quarterly estimated taxes, and I put it in a separate account. Okay, so different ways to pay so these are the different ways that you can pay your quarterly estimated taxes. One, the old-fashioned way, snail mail. You go ahead and you fill out the form 1040 ES and you mail it along with a check to the IRS. As simple as that. Now, not too many people nowadays use checks and snail mail, but if you do, that's an option. Another option is to pay online, which is usually the easier way. So you go to www.irs.gov/epay. You can pay via direct pay. And direct pay means that the IRS is going to directly debit your bank account. Or you can pay using a debit or a credit card. Now, some people don't want the IRS all in they don't want the IRS's hands in their account. Not that the IRS is going to take more than they should, but they just don't feel comfortable with that. So if you don't feel comfortable with the IRS directly debiting your account, then you can just go ahead and use a debit or a credit card to make your quarterly estimated tax payments. It's as simple as that. And then thirdly, electronic federal tax payment system, also called EFTPS. Now, this is the best payment method for businesses or for larger payments. If you are a C corporation, usually you are required to pay this way. If not, if you're not, you can pay this way. It's an option for you. Now, if you decide to go this route, you have to enroll. Enrollment is required, and it normally takes a few weeks to set up because after you enroll, IRS sends you this PIN number, and you go back and you create the account with the PIN number. So it takes a couple of weeks, but it's so simple. Once you've enrolled, then all you have to do every quarter is just go onto the website and then make the payment directly from there. And it's just so easy, it's so painless. And then you can download a copy of the actual payment voucher and keep it for your records. So that is the EFTPS. You can always go online and just Google it, and it's going to come up for you. So with penalties, when does the IRS normally penalize you for not paying your estimated taxes? They penalize you when you didn't make the required payments, period. So let's assume you just didn't make any payments. The IRS they're going to penalize you. Okay, so not making estimated tax payments will cause you to have to pay penalty and interest if you were required to make payments for any given year. So if you were required to make payments then and you don't make them, then you're going to be penalized. And normally when you're penalized, you see it at the end of the year, or rather in April when you file your tax return. And if you look down the line where it shows you your tax liability, right beside that on the left-hand side, there's a dollar amount there. And that is a penalty for either underpaying or for not making your required payments. Now, if you owe money, or rather, if the IRS owes you, once again, you don't have to worry about it. Same thing with, let's assume that you file your tax return late. And I think I did a podcast about filing your tax return late and not filing an extension, and how the IRS literally kills you with penalties and interest when you do this. I mean, they literally kill you. They prefer that you file your return and don't make the payment. The penalties for that is a lot less than just not filing. When you don't file, those penalties are a killer. I have seen sometimes where people have not filed their taxes and they didn't file an extension. And by the time the IRS gets done with them, the penalties and the interest sometimes is equally as high as what they actually owe to begin with. Because sometimes the assumption is when you don't file a tax return or file an extension, they're thinking in their minds, okay, are you trying to evade taxes? And they don't take that lightly. So even if you owe money, don't be afraid to file. Just file and owe money. It's okay. They're okay with that. Just it's the not filing that they're not happy with. Okay. So if you are not going to file your tax return on time, as you all know, April 15th is tax day, file an extension. And you make sure you file the extension before, at least by April 15th, because if you haven't filed it by April 15th, then it's no good. Okay, so make sure you file an extension. Now, another reason why they will penalize you is you underpaid your estimated taxes. So if you didn't abide by the 90% current year rule or the 100% prior year rule, whichever is smaller, then you are going to have to pay you're going to have to pay a penalty. So even if you made estimated tax payments, but you underpaid, you get penalized. Of course, you don't get penalized as much as you do for absolutely paying nothing, but you do get penalized. See, the exception to the 90% and the 100% rule, once again, is the $150,000 or more, where you're required to pay either 90% of the current year or 110% of the prior year. So if you don't abide by any of these rules, then you will be penalized for not paying your quarterly estimated tax payments. Okay, and as I always say, as entrepreneurs, paying taxes 4 times a year may be a little bit challenging, but proper preparation, staying organized all year round, and keeping your books tax ready can help make it a painless and achievable task. So keeping your books tax ready, all that means is making sure that you are constantly tracking your income and your expenses. So you have to figure out for yourself what type of plan you want to be on. Do you want to track them on a weekly basis? Do you want to do your bookkeeping every other week, every month? Usually try not to go past a month. When you start going into 2-3 months, it can get quite confusing. So at least try to track your expenses or record your income and your expenses at the very least every month. But if you can do it as stylists, usually I just find for our industry, especially if you are an independent stylist and you're not that organized, then weekly is best. But if you are very organized and you use one bank account for your business and you're not commingling funds, then you can do it every month because you're organized and everything is right there. And all you have to do at the end of the month is to just go ahead and, just record the income and expenses. Now, if you use a bookkeeping system like QuickBooks Self-Employed or QuickBooks Online, there are ways to set it up where it's automated, where you can set things up and you can create rules that does everything for you in the background, which means when you turn on your computer and at the end of the month, what you need to, you want to go ahead and do your bookkeeping, most of it has already been done. So all you really have to do is to record the 1 or 2 or 3 transactions that don't have a rule. Those transactions are usually ones that are not very common. And then you want to just go back to look and see the transactions that the system automatically recorded for you. You just want to look at that to make sure that everything was done the way it should have been done, and it takes not a whole lot of time. Okay, and to me that is a blessing because most people don't like doing bookkeeping. So if it's set up properly, then there are ways around that. Okay, so let's go ahead and do a short, or rather, let me just show you how this spreadsheet actually works. So I'm gonna attempt to change screens, and hopefully it works out the way that I planned it. So let's see, share my screen, application window. Let's see, I need to make sure I'm sharing the right screen. I think it's that one, and share. Okay, can you see an Excel worksheet? Just say yes if you can. Okay, great. Okay, so this is the Excel worksheet that I created. Now, I have a worksheet limitation. So this worksheet does have its limitations. So let me explain to you what the limitations are when it comes to calculating your estimated taxes. When it comes to just tracking your income and your expenses, there is no limitation. The only limitation is if you want to use it to calculate your estimated taxes. Now, I tell folks, even let's say you use a totally different bookkeeping system. So let's say you use QuickBooks Online or you use a different bookkeeping system that does not track your income and your expenses. You can use this spreadsheet strictly as a calculator. So in other words, you don't necessarily have to use it to track your income and your expenses. There is a way you can just input a single numbers to help you calculate your income, calculate your estimated taxes. So don't think that that you have to use this to actually record your income and your expenses in order for you to be able to track, or rather in order for you to be able to calculate your estimated taxes. So the worksheet basically is the limitation is your tax filing status at the end of the year is single and you make $157,500 or less a year. That's one requirement. Your tax filing status at the end of the year is married filing jointly, and you make I'm sorry, your tax filing status at the end of the year is married filing separately, and you make $157,500 or less a year. Under those circumstances, you can use this spreadsheet to calculate your quarterly estimated taxes. If your tax filing is married filing jointly and together you and your husband or your wife make $315,000 or less, you guys can use this spreadsheet to calculate your quarterly estimated taxes. Now, one stipulation, and I think Felicia brought this up, neither of you, either you or your spouse, can have W-2 income. So if one spouse has business income and one spouse has W-2 income, then you can't use this spreadsheet. Okay. And then finally is your income can only be derived from self-employment or investment. So if you have your own business and let's say you also make money on the side, let's say you own real estate, so you rent out property, or you have investment income, or just different types of other income other than business income, then you can use this spreadsheet to calculate your quarterly estimated taxes. Okay. Now, even if you yourself, let's say you have business income and you have a W-2 job, then you can't really use this. You can't really use this spreadsheet to calculate to get a true calculation, because you would need to combine your W-2 income with your with your business income in order for you to determine what your estimated tax payments are going to be. Okay, so this tab encompasses just the instructions. So it's the instructions on how to utilize the spreadsheet. Okay, I'm not going to read it because I don't want to bore you guys half to death. But it just pretty much, if you do decide to get the spreadsheet, you'd want to read the instructions first and foremost before you do anything, because there's information on here that's going to help you. Understand how to use the spreadsheet. Okay, can't see a spreadsheet, only a D. Okay, can you see it now? Okay, so someone is saying yes, somebody is saying no. Okay. So some of you can see it and some of you can't see it. Well, I'm not sure what to do to make that right, but hopefully it flashes back on your screen. So I'm just going to go ahead and move on for now. Okay, so this spreadsheet also has a chart of accounts. So what is a chart of accounts? A chart of accounts basically is the types of accounts that you are going to need for your business. So you have advertising, you got office, you got accounting fees, insurance, equipment, expenses, and all so on and so forth. Now you can actually change these accounts. And what I'm going to do is, if a person decides to get this, I'm going to send you a chart of accounts that is more or less geared towards the beauty industry, because you can actually go in and change some of these accounts to accounts that are more or less fits our industry. Now, as you can see, you have custom expenses 5 through 11. And with these custom expenses, you can go ahead and just add any other account. So if there's an account that you use that's not on this spreadsheet, you can go ahead and just add it here, or you can just change any of these accounts. And then over here, I have the type of transaction that belongs in this category. So for example, you have your meals, and that's just business meals with clients, or meals when I travel away from home. Because when you travel away from home, okay, the meals that you purchase, let's say you have an event to go to, the meals that you purchase are tax deductible. Okay, at least 50% of it is tax deductible. And of course, if you buy meals for clients, that's also tax deductible. So you have your category name, which is a type of account, and over here you have an explanation of what that particular account encompasses, the type of transaction that is associated with this particular account. And then you have your category type, whether it's an expense, whether it's a cost of goods sold, or whether it is a revenue. Okay, so any changes that you want to make to the chart of accounts, you have to make it on this particular tab. And then you have your transaction tab. Now your transactions tab is where you record all of your transactions. So you don't record the transactions on the income statement. This is the income statement where everything flows. When you record a transaction, it's going to flow from the transaction sheet to the income statement. You don't directly record anything in here, okay? You record everything in transaction. So for example, let's say we want to record, I don't know, advertising. So advertising and marketing is a revenue, and let's say the date is January 1st, 2019. Okay, this description, I don't know, Facebook ad, and that's an expense. Now with the spreadsheet, all expenses have to be inputted using a negative number, okay? And that's part of what the instructions lets you know. So negative 200, so that's the expense. Now let's say we want to record revenue. So we can go ahead and we can pick, you can scroll down, because when you scroll down, it shows you all of the accounts that are located on the transaction screen. So everything you see here is located on the transaction screen. So you can scroll down to try to find whatever expense or whatever revenue type you're looking for. In this case, we want to pick sales revenue or service revenue. And let's say, so that's revenue, of course, and we'll just use the same dates of, oh no, we can use February. So February 28th, 2019. And we'll say revenue, just say full color. So let's assume we're doing this on a weekly basis. So what do we make in color? So for full color for the week, we brought in $650. Okay, so a revenue, you're gonna use a positive number. Now let's say we sold some products. So we sold products. We're gonna do sale of product. So sale of products is, let's see, sales revenue. So sales revenue is going to be any kind of product that you purchase, whereas with service revenue, it's going to be for a service. So of course, this is revenue. And then we will go ahead and just use a March number. Now, let's say we sold 10 6-ounce bottles of Aveda shampoo. And that we made from that sale $600, right? But now we want to record cost of goods sold. We want to go ahead and we want to record, rather than just saying, okay, this is an expense, we want to record the cost. What did it cost us to purchase this Aveda? And normally in our industry, we normally mark up 100%. So if we buy something for $10, usually we mark it up for 100%. So then it's going to be $20. Okay, so we'll go down and find the cost of goods sold. So that's cost of goods sold. And then that's, and we'll say on that same day. And then, of course, we're going to go ahead and do the 10 6-ounce. So the cost of goods sold is $300. So you do a negative 300. Okay. So that is how you record transactions using this spreadsheet. And then after you're done recording the transactions, everything flows to the income statement. So you can now see everything that we inputted. Now, if you attempt to input something directly, here's what's going to happen. No. Let me go over here. This is the actual, well, I'll come back to that. Okay, so basically you can see that all of the income, service revenue, and our sales revenue of $600, our service revenue of $650 is recorded. So our total revenue for the month of February so far is $650. And then, of course, we have our cost of goods sold for our sales revenue. And then we have our advertising and marketing, which was $200. And basically, we didn't bring in any revenue in January, so we had a loss. But you can see how it works. So everything that you record, everything that you record on the transaction worksheets automatically flows into the income statement. Now, one good thing about this spreadsheet was, because what I find is I have people calling me saying, oh my God, Desiree, I need to get my back taxes done. I haven't done taxes since 2017, but I would like to prepare them. What do I need to do to get my income and my expenses together? So what I did was I created the spreadsheet, and it goes all the way back to 2015. And it goes forward to 2024. Okay. So let's assume that you recorded some transactions in 2018. So let's say you click on 2018, you notice how it just totally changed. So it brought in 2018 transactions, which if you click on the transaction screen and you click on the filter, it shows you, okay, you have 19 and you have 18. Now, what if I don't want to look at 19 transactions? You just click off, and then you click on 18, and now it's only going to show you, well, it was only supposed to show you 18 transactions, but let's try that again. Let's, here it is. It shows you 2018 transactions, only 2018 transactions. So this is the case. So let's say that you want to use this for either because you want to catch up on your taxes, or you just want to use it year after year, you can do that. And if you only want to see a particular year, you use the filter tab to just pick the year that you want to look at. And same thing, if you're on the actual spreadsheet, you pick the year that you want to look at by clicking on this down arrow and picking the year. So now we want to go back to 2019 and get rid of 18. And this is what we do. So now we're back looking at only 2018, 19 transactions. We can go back here and get rid of 2018 transactions by clicking on the checkbox here, clicking on 19. And now we're looking at only 2019 transactions. Okay. Now, one other thing that the income statement does is it helps you to project your future growth. So let's say, for example, you say to yourself, okay, if I make 50% more, how much money am I going to bring in if I make 50% more than I made the previous year? All you have to do is type in 50% and it shows you. So let's do this. So 50%, let's type in 50, and it's telling you that your total year to date is $600. Okay. If you increase your year to date income by 50%, you are projected to bring in $900. I'm just keeping the numbers small so it makes sense. So that's one other thing that the spreadsheet does. It helps you to project your growth rate. And of course, you can go back to 2015 all the way forward to 2024. And then finally, we have the actual, this is where all your your quarterly estimated tax calculations happen. So in order for you to accurately record your quarterly payments and get an accurate number, you have to have filled out or recorded all transactions for January, February, and May. Okay, so once you have recorded all transactions for January, February, and May, and you click on the quarter one tab, automatically all of your income flows to the actual quarter one tab, and then you start doing the calculations. So based on what you're looking at right now, the only areas that you can actually input data are the areas that are in Aqua. You can't input data anywhere else. So let's say you try to input data here on 3, you're going to get an error message. And the reason why I did that was because it's so easy for people to accidentally go in and change formulas, or if they start just keying in different numbers, then they just mess up the entire formula. I didn't want that to happen. So I just left your ability to be such that the only numbers you can actually input are the ones that are necessary to calculate your taxes. So let's assume you're calculating your taxes. Let's assume that you've filled in January, February, and March, and quarter one is ready to go. Okay, so line 1 is going to tell you what you are projected to make in the year that we are in. Okay, line 2 provides you with your self-employment net income. And then I don't know if you guys know this, but with the new tax law, there's a brand new credit that we as business owners get. It's 20% of our qualified business income. We get a deduction on 20% of our qualified business income. So that's what this line is for here. So it's actually calculating that 20%. Now, the other income is an input field, because you may have income. Let's say you have real estate income, rental income. You want to input it here. Okay. Then you have your gross, your adjustments to income. Your self-employment tax is part of your adjustment, but that's an automatic calculation. It calculates automatically. Now, if you pay health insurance and you qualify for a deduction, you'll input it here. If you are paying into your retirement account as a self-employed individual, you'll input it here. And this line 12 is all other adjustments. Now, I know this sounds a little foreign, but I have a class that I created for this particular spreadsheet that goes down line by line and explains to you in detail how to actually use this spreadsheet. So it may seem a little bit confusing, but if you watch the video and you follow along with me, as I'm doing and explaining things, then you too can just go ahead and calculate your estimated taxes based upon what I am telling you to do. And then when it's all said and done and all the correct numbers have been inputted, your total estimated tax payments are going to show up right here. This is what your total estimated tax payments are going to be. And then this is what your quarterly payments will be. So whatever number is online, whatever amount is in this particular cell is what your quarterly estimated taxes are going to be. And here is the tax table. So you're going to use this tax table to actually calculate what your tax is. And it all depends upon how you file. So if you're a single filer, you will use this tax table. If you are married filing jointly, you would use this tax table. If you are married filing separately, you would use this tax table. And if you are head of household, you would use this tax table. So everything pretty much is very straightforward. I know it may seem a little complicated right now, but it's pretty straightforward. If you have the video beside you, then you can definitely figure it out. Okay. Let's see. So that's pretty much, and I put, as a matter of fact, if you look somewhere in, I don't know if you guys can see the offer that I have included. I don't know if you guys can see it or not, but there's an offer with this quarterly estimated calculator. So if you're interested, of course, in purchasing it, you can go ahead and click that link and purchase it, and you will get the class that comes along with it. And it breaks everything down bit by bit for you. And it also breaks down how to use the bookkeeping system as well. So I break things down very, very clearly, that way you understand exactly what you need to do and how the spreadsheet actually works. And also, as you can see, you have 4 tabs: quarter 1, quarter 2, quarter 3, and quarter 4. One thing you should know is everything builds on the other. So when you have quarter 1, consists of January, February, and March. So when you have completed January, February, and March, the numbers in quarter 1 are going to be correct. Now, quarter 2 is not going to be correct or accurate until you have completed April and May. So once you've completed April and May, then you can go ahead and calculate your quarter 2 estimated tax payments, because April and May, because your second quarter builds on your first. So it's not a thing where, okay, quarter 1 is this, quarter 2 is that. It's not necessarily separate. It all builds on the other. So in order for your quarter 2 estimated taxes to be correct, it has to take quarter 1's income and expenses into consideration. Same thing with quarter 3. In order for quarter 3 to be correct, it takes quarter 1 and quarter 2 income into consideration. Same thing with 4. In order for 4 to be correct, it also takes into consideration quarter 1, quarter 2, and quarter 3. And then whatever you're paying in quarter 4, it will then be accurate based on the prior quarters. Okay. So are there any questions? Okay, someone says, how can I gain access to the spreadsheet? Will it be emailed? Actually, I don't know if you can actually see it, because I actually put it in. Let me know if you can see the actual spreadsheet, if you can see the offer. If you can, say yes. If you can't, say no. Okay, so Felicia, someone said I didn't see the offer you're talking about. Okay, so what I'll do is then I'll probably just go ahead and email it. I'll go ahead and email it to you. I'll email it to you. And then also one other thing that I have is, because I get a lot of questions, like as I said earlier, I get a lot of questions, a lot of accounting and tax questions. And I know that usually a CPA services is not necessarily cheap. Okay. So one thing that I really want to get this information out to you, because I think it's so important that we, understand what we need to do as business owners. So I created a subscription site. The subscription site is like $15 a month. And I have a bunch of classes in there that talk, it's really a financial and business classes. I create financial business classes, financial and business podcasts, financial and business blogs, and I put it all in this membership site. So what I've done is I said, okay, you can actually be a member for $15 a month, and you get to watch all of the content that is on that site. And because a lot of times you may have questions that you may not want to necessarily pay someone to answer for you. Now, there are some questions that you need to have a consultation. But then again, there are some questions that are simple enough where you don't necessarily need to pay someone. You can just, if you watch a really, really good video about the question that you have, you'll get your answers. And not only that, even if you don't get your answers, you would know the questions to ask. If you finally do decide to hire someone to consult with, then at least you know the questions to ask. You're not going in completely blind. You have some knowledge based on the video that you watched. So if you're interested in, being a member, then I'm also going to send out that link. That way you can go in and take a look at it and see if it's something that interests you, because, excuse me, it shows most of the classes that I currently have up and some of the classes that I have coming. And I mean, it's a great resource because I try to answer questions that I get on a regular basis. I have people asking me questions. I say, well, let me just go ahead and do a class about this. So you can just go ahead and watch the class. So it's going to be something that is very beneficial to our industry. Okay, so let me see if there are any questions that I didn't answer. Let's see, can see a spreadsheet. Although my spouse is okay. Okay, someone said, how can I get access to the spreadsheet? I'm going to email that. Where is the link to purchase? I'll go ahead and email you that. And then someone said, I don't see the offer. I'll email it to you. Someone again said, I don't see the offer. Okay. And then someone said, I missed a lot of the presentation due to not being. Will you do it again? Okay, so I'm not going to do it again, but I'm recording it. So I'm going to send out the replay. And unfortunately, the first 30 minutes, I thought I was recording, but I wasn't. So I actually started recording it about 30 minutes in. But I'm actually live on YouTube. I also have a YouTube channel. Matter of fact, you can probably go to my YouTube channel and watch it because I'm live on YouTube as well. And I'm hoping and praying it's recording on YouTube, because if it is, you're going to get it from the beginning to the end. If it's not, then I may have to just go in and re-record the first 30 minutes and then send out the replay. Okay. Are there any questions? If there are no questions, I'm going to go ahead and sign out. And I really, really appreciate you guys spending your Monday evening with me. And I've gone over about 20 minutes, and some of you have stayed on the entire time. I really appreciate it. And I'm going to let you guys know when I'm going to be doing my workshop for QuickBooks Self-Employed and QuickBooks Online. And also, I'm going to be doing another free webinar. And this one is going to be for personal finances, because what I'm finding is that a lot of people that I work with do not have their personal financial budgets together. Okay. They don't really understand. They don't even know what their liabilities are. They don't know what their net worth is. They want to maybe invest in their business. They may want to invest in another business, but they don't know, how much money they have left over at the end of the month. They don't know where their money is going at the end of the month at all. So I am going to be doing another webinar like this. I haven't decided if I want it to be a webinar or if I want it to be a workshop, because I created another spreadsheet that's going to help you for your personal budgeting, and it's going to show you what your net worth is. So you are going to know exactly how much you are worth. So if you own a home, you own a car, if you have retirement savings, if you have student loans, if you have liabilities. All of that information is going to be part of this particular workshop or webinar. And you can sit down, get your finances together so you can look and see exactly what your personal financial position is. Because before you can actually, create a good financial position for your business, you have to really understand and know your own personal financial position. And then if you know your own personal financial position and your financial situation is under control and you understand what's going on, it's a lot easier to transfer that into business. So I'm going to also do that. And that's also going to be part of my class, because I'm going to go ahead and do a webinar about it. I'm not going to get as in depth, but with the class that I teach, or rather with the class that I create, I'm going to get really in depth. And that particular class is also going to be on the subscription platform. So you can always go in and you can watch it. You can download the spreadsheet, use it for your own personal, use it to create your own personal budget. So these are some of the things that I have planned. Okay, I have a couple more questions. Felicia, although my spouse is a W-2, can I still use a spreadsheet just for the transactional part with keeping a log? Yes. So the spreadsheet is twofold. It's a calculator, and it is also a you can also use it to track your income and your expenses. Now, one other thing that I didn't mention that I do need to mention, if you decide that you want to just use this spreadsheet as a calculator, let's assume that you already have a system that you use to track your income and your expenses, and all you want to do is to use this spreadsheet as a calculator. Here's what you can do. Now, one thing you need to keep in mind is, because it's very date sensitive, because when we're calculating our estimated taxes, it's very, very date sensitive. So you got to make sure you use the right dates. Let's assume that, okay, January, February, and March have come and gone. Now you want to calculate your quarterly estimated taxes. What you do is you can just go ahead and, so you want to grab your net income from whatever accounting system that you use. So your net income would be all of your income minus your expenses. You want to go ahead and grab that, okay? And then you want to go in, let's say we're doing first quarter. So you want to go ahead and use a January date, okay? And then you could just say, January net income, whatever that is. Let's say that's $16,000 that you made in January. And then you can, you can go ahead and, I don't know what I just did. Just did something a bit stupid. Okay, so, all right, so then you can do the same thing. Now you're going to use a February date. And then this is February net income. And then let's say you made $10,000 in February net income. And then we're going to go ahead and do March. And this net income can include products as well as service. All we're trying to do is we're trying to just capture your net income. That's really all we're trying to do. So you don't even have to, matter of fact, you don't even have to type in revenue here. You can just go ahead and the only thing you really need is the category name and the date. Everything else you don't necessarily have to do. You can even skip that, and then you just say you made, let's say we made, I don't know, $6,500. Okay, so you see, all we need is our net income. Now, when we go into the income statement, you can see that January, February, and March have been filled. And this is what our net income is for all 3 quarters. It's $32,500. Now, you can then move on to the first quarter tab, and you can now see that the numbers have been calculated. So what this is telling you that based upon what you made in the first quarter, okay, which is, what is it? $32,000, $32,500 in the first quarter, the spreadsheet has projected that you are going to make $130,000 in 2019. That's what the projection is. So your estimated taxes are going to be calculated based on this number. So when you get done filling in all of the blue areas, if you need to fill the blue areas in, not everybody does need to fill in the blue areas, then your quarterly estimated taxes are going to be calculated, and you're going to see on line 24 what your quarterly estimated taxes are. So that's another way of doing it, okay, if you already have a system. And then finally, let's assume that you don't even feel like doing it by the month. Let's say that you're just really lazy and you say, you know what, I don't even want to type in 3 lines. That's still too much for me. Don't want to do it. So then, as you can see, I typed this in, so I'm gonna get rid of that. Okay, so the spreadsheet is now blank once again. But now you say, you know what, I already know. I've calculated what I made in January, what I made in February, and what I made in March. So what I'm going to do, I'm just going to go ahead and I'm going to just input the number. And I'm so lazy that I'm not even going to type in a category name. I'm even more lazy. I don't even want to type in a category type. Well, I know I have to type in the date, so let me go ahead and do that. You want to make sure for the third quarter you use a March date, because remember, this system, everything rides on the other. So you got to make sure it's a flow. So if you're doing second quarter, you're going to use the end of second quarter date. So end of second quarter is what? May. So you use a May date. In this case, we are just trying to do the first quarter. So we have to make sure that we use a March date. So March 31st, 2019. And you're so lazy once again that to hell with the description. I don't even want to type that in. I just want to type in what I made. So let's go ahead and do that. So for all 3 quarters, you made $32,500. Now let's move over to quarter 1. So now you can see once again, everything is filled out. So you got the exact same dollar amount here. So it doesn't really matter how you input those numbers, as long as you input the numbers in the right dates. That is where you're now going to be able to calculate your quarterly estimated taxes, okay? So once again, you can just use this as a calculator. If you already have an accounting system that you're happy with, you can just use this as a calculator and you are then good to go. You're good to go. I don't understand why this thing is acting crazy. Okay. Yeah, so that's pretty much it. So let me go ahead and delete that and delete that. Okay, let me see if there are any more questions. Are we supposed to be seeing... Oh, well, yeah, you were supposed to be seeing it. Yeah, I don't know why the screen is frozen. And I'm so sorry about that. What I may have to do is I may have to just go ahead and do this and redo it and send it out if you're having problems. Okay, so are there any more questions before I sign out? Or is everyone still here? I see participants, but I don't know if the screen is frozen to a point where, okay. Okay, so if there are no other questions, I'm going to go ahead. Okay, still here. Okay, still here. Okay, I'm here. Okay, so you guys are still on. All right, so I'm going to go ahead and sign out. And I want to once again thank you guys for taking the time to be part of this webinar. And I'm going to go ahead and send out all of the links that I talked about. One link is, okay, I have another question. Although my spouse is W-2, can I still use this spreadsheet just for transactional part? Keeping the log. Felicia, yes, you can. You can use it just for transactions. That's not a problem. Okay. Cool. I'm glad you like the spreadsheets and spread the word. Okay, Renee. Thanks, Renee. And good night to you too. Okay, guys. Thank you so much for spending your evening with me. I really do appreciate it. And I will speak to you guys later. Expect to get an email from me as well. Okay. Thank you. Bye.